So today our session number is 2 and the part number is 5. We are continuing the UE Corporatex learning part. So just now we understand the exempt income, and under exempt income we understand in Corporatex return how we gonna file and what are the implication in the Corporatex return. So now the next we are coming back to the taxable person. What is the taxable person over here? So we have to understand. So what the taxable person, under the person will be taxable person, exempt person, natural person, and out of scope person. So now let's understand the person as if which are the person will be under how many categories we can divide the person. The person means we are saying the entity who subject to tax, but that category may be the exempt, maybe natural person, maybe out of scope person. So the first, the person, now we're gonna understand the taxable person. Who is the taxable person? Might be resident, might be non-resident. So on which income they are subject to tax worldwide? Just now we learned the concept of resident and non-resident. So we're saying the UE resident means the UE resident subject to corporate tax on worldwide income. So this is the fundamental concept we have to understand throughout the taxation. It will be impacting us. It will be alarming us if we did not understand this basic fundamental principles. Because while applying the taxation, if you skip this part, so your calculation will go in wrong side. Your understanding, your implementation is going wrong side. So another concept, non-resident. If the basic difference of the non-resident, on which income they will be taxed. They're saying UE source income. Here they did not mention the worldwide income. Do you guys understand? When the taxable person is a resident, they're saying worldwide incomes falling under the city. When the person is a non-resident, the outside company outside means the outside UAE company. Outside UAE company, if they're doing the business activity in UAE, that is subject to tax. What does that mean? State source income. The word normally in all the regulation they're using state source. State source means state is UAE. If they are getting the income from UAE, it's subject to city. But if company is registered over here, they have the license over here, so then the worldwide income subject to tax. Any question up to here? Guys, any question up to here? Now the question is that from Abdullah, is a branch of foreign company the resident and non-resident? See, the branch is another concept that fall under PE. So once we discuss the PE, then we'll discuss the branch also. But as a general, not the specific, it may be resident, but there is a certain other condition. So it may be resident as a general answer on that. But once we dive into the P concept, then you will understand what is the branch. Okay, the next is an exempt person. So we're gonna see in the next slide the exempt person, but before that, let's understand the natural person. Because these are the commonly used taxable person, natural person, because the exempt person we learn in the first session. If you remember, exempt person we learn in the first session over here. These are the exempt person. What are the exempt person? Government entity, government control entity. So all these are we discussed in our first session, right? So now come back and let's see our exempt person. Marking the reference to the slide again, it will for your better understanding. Now the natural person, again the natural person, we have to look into that either resident or non-resident, because the implication may differ in case of resident and in case of non-resident. But on the same side, on the same point, if a juridical taxable person versus the natural person, there are certain difference will remain there. Okay. Some benefit will remain for the natural person is the UE resident and the non-resident so maybe the some benefit for UE resident, the same benefit offered to UE non-resident also. But the same scenario is not over here, the juridical person. When we come to the juridical person, same option is not available. So any point up to here? Any question? I appreciate one of the participant. I think we already, Abdullah, I believe we added you as a host, and you have this, your mic is, you can unmute. So please check if any question is coming and I missed. So please, you can highlight. I appreciate your participation in this regard. So natural person, we said the resident and non-resident, that also we learned. Now let's see some of the more example, although we have the understanding in the previous session as well. The natural person is coming. Natural person might be individual, might be the business. Natural person, maybe he's doing under his own capacity or might be he's doing the business. You understand the business we said in the first session, doing the business with trade lessons or without trade lessons. That also impacting. So as a natural person, NP in own capacity, out of scope, which are the income we learned in the first session, this wages and salaries, personal investment income, real estate income. These are the out of scope. Now the out of scope person, here's the income. Income earned by natural person is out of scope. Earned by natural person. Now out of scope person, how the out of scope person? Natural person not doing business. Okay, so natural person doing business turnover or threshold less than 1 million. This is the another learning that we learned in the previous session. Okay, so natural person who's not doing the business, it will remain here not doing business, here doing business, but threshold less than 1 million. It's not equal to less than 1 million. Then foreign P, this is also we discussed in the first session. If we made the election, the foreign permanent establishment, that normally we commonly see say the branch, but the P definition is a more comprehensive. So is out of scope. Then we are saying the non-resident without P and without nexus. Okay. So these are without P. P means the branch. And with nexus means he may have the property over here, but under personal capacity, So that is also out of scope. So when we talk about the business not automatically exempt. So we have to look the specifically activity of that business, and then we have to apply for the exemption if they're meeting the criteria or not meeting the criteria. So another concept over here, the foreign investment. The foreign investment, what benefits to have the election? Foreign investment, what benefits to have the election? Subsidiary will not give you the profit. Is this correct or no? Subsidiary will not give profit. Like if we did the investment as a person in the foreign subs company as a subsidiary, so they will not give the profit. What does this mean? Anybody would like to answer on that? Anybody would like to highlight this point? As maybe you are facing some challenge with the use of this application, but it will not take more time. Just try. Here the concept is that the branches give us profit or loss. Like the subsidiary, they are giving us dividend. So this is the important concept. Subsidiary will not give us profits. From subsidiary, we'll get the dividend, rental income, interest income, royalty income, management fee. So this is the another fundamental concept we maybe most of us is familiar. I'm just highlighting for better understanding. Another point, the natural person we discussed in the first session also are the UIP partner doing real estate activity without trade license. What are the difference? Without trade license through UIP. UIP means, let's say, two person here like the Ghazanfar plus the Abdullah, they are two person. So now they want to buy the property. So let's say the 1 million added by Ghazanfar, 1 million added by Abdullah, so 2 million. So they buy the 2 million apartment in the UAE. So it's some sort of partnership. What does mean unincorporated partnership? Unincorporated, did we took the trade lessons? Did we took the trade lessons? No. To buy the real estate under own name, we don't need the trade lessons. But still, as a joint, we have the 1 plus 1, 2 million, and we buy. So this is called the unincorporated partnership. We did not register this partnership. May not subject to the corporate tax, personal investment, or real estate income eligible for RET relief. Because this is falling under personal income, although coming from real estate, but still under personal income. But the same concept, if we take the trade lessons, so the same scenario will be different. So if we take the trade lessons, what will be the impact over here? Anybody would like to clarify? If we take the trade lessons and do the same activity, so what will be the implication? If we do the same investment activity with trade license, so what is the impact?
Sir, the whole scenario will be changed. Can you hear me, sir?
Here we are doing without trade license, and here we are doing the real estate activity, but through trade license. Whatever the trade license, that is the another. But first we have to understand through the trade license. So if we do the same real estate investment, Ghadanfar and Abdullah, 1 plus 1 is 2 million. So now what we did, we have the one partnership, like the unincorporated partnership, but through the trade license. So if we took the trade license and still we're doing the real estate activity, that over here is the exempt or out of scope. Here is the out of scope, but here is subject to corporate tax. So this is the basic difference, where that having the trade license, even this activity is not required the trade license, but we still took the trade license and we did the investment. Now we are subject to CT 9%. So any question up to here? Amit, okay. Yeah. Yes, Amit. See, when you raise the hand, so I can enable your mic. Yes, please, Amit. Amit.
When we take the trade license, it doesn't matter like whether they are investing in the commercial property or the residence.
Amit, are you there still? Your mic is also on.
Can you hear me?
Okay. So
Audible?
he got on his hand. So let's see. Please.
Am I audible?
You still have the question, please? Okay, so let's move to the next point. Maybe due to some difficulty with the app, was not able to continue with this point. So again, I'm just highlighting corporate tax. What we are learning: taxable income, taxable person, tax period. So these 3 points we are learning so far. So now we understand the taxable person. What we are understanding taxable person, this is the our point. So while understanding the taxable person, so we understand the natural person, although we have the discussion in the last session as well. Now the next is the out of scope person. The out of scope. So which are the person will be out of scope? So UIP not subject to tax. Any UIP means UIP unincorporated person. If you're not registered, is out of scope, subject to the other condition. Family foundation which are treated as a transparent. This is the another important part. The family foundation by default, it's subject to the city. By default, subject to the corporate tax at 9%. Family foundation is a the juridical person in the eyes of law. In the eyes of law. But we learned in the first session, they eligible claim the exemption. But this is the automatic or by application. So this is the automatic or by application. Anybody remember that? Anybody remember that? This is the automatic. Family foundation automatic exempt or by application. Dear participant, I appreciate you at least give the answer. Right and wrong is not important. You will know all the answer correctly, but at least give the answer on that. So this will be by application. This is the by application. So we have standalone one session on the family foundation, where we understand what is the family foundation and how we can apply for the exemption. And the companies are the person who have the family foundation. Who will open the family foundation? Normally, these are the wealthy people. Wealthy people, rich people. So they bring their investment, maybe mostly the local UAE national that we call the locals, UAE national. Okay, like the Shah Rukh Khan, like the Salman Khan. Okay, so these are the rich people. So they open the foundations. The foundation manage their wealth. How they manage? By investing in A, B, C, D, different kind of businesses. So normally, if we're seeing all the locals are the wealthy people, they are not working themselves. Their wealth is working. But again, they have the structure. So the family foundation, mostly the wealthy people, even you go for the any advice to the normal taxable person versus if you go to the such wealthy people, the family foundation running by the family foundation, if you earn from here, let's say the 10,000, from here you can earn 20,000. The same amount of work. Why? Because these are the wealth management infrastructure are the entity. So if you do the activity as assessment and this family foundation, it got the exemption, how much the amount of tax is they are saving is beyond all the taxable person, but subject to meeting all the condition. Why I'm highlighting the importance of the topic is also very important to highlight why we are learning such things. If in your circle or in your connection or in your client or your company or your employer having such activity, so they are paying more over here. Why? Because claiming the exemption is also activity where the saving for the employer or the client is matter for them. That's why the compensation will be more. Okay, so now we discuss about the family foundation. Next is a natural person. We discuss with trade license, without trade license, real estate, income, personal investment. This also we understand. So up to the person we covered, the income we also covered. Okay, the exempt income we discussed in very detail. The taxable income, normally all the companies have the revenue that's subject to tax. So of course in detail we're gonna cover, but as a common understanding, we knows what are the exempt income and taxable income. Normally normal course of business operation is subject to the taxable income. But which are the income exempt out of scope, that we will dive into detail. So now the third point, the tax period. So what is the tax period? What is the tax period? What is the tax period? So we understand the accounting period. We understand in the first session, accounting period is equal to tax period for the juridical person. Natural person, we said the Gregorian calendar year, that is Jan to December, is fixed, right? So tax period, the first point is coming, juridical person. The importance of the juridical person is very, because if you ask, the juridical person is a different and natural person is a different. So now we, before understanding the tax period, we have to understand the juridical person. Which are the companies or which are the person can be juridical person? Normally we seen the LLC companies, private limited companies, limited liability partnership, PJSE, public joint stock companies. So anybody would like to highlight the difference? What are the difference in these three or four business types? In daily life, every day, mostly the companies we are interact, this are the LLC companies. And there are one other type, the private, that is not very common but still exists, private limited company, and the limited liability partnership, where the two partners come together and they register with the DD, and that is the limited liability partnership company. And in terms of the public joint stock company, the shares are traded, the Lulu shares are traded in the stock exchange, so that is public joint stock company. And the banks, mostly the banks are public joint stock. If you've seen their, the names is normally written the PJSC. Another category, the poem, we will understand as a standalone, the place of effective management. Normally we are not seen in the daily life, but these are also subject to tax. So we discussed the juridical person operating out, registered is outside juridical person. Let's take the example to understand the juridical person where is registered in KSA. If registered in KSA, so their main market is the KSA, but still KSA, but still they are doing business in UAE also, but as a resident of the KSA. Incorporated outside UAE, but effectively manage and control in the UAE. So let's take the example, the people we all maybe agree or maybe not agree, the UAE lifestyle versus the KSA lifestyle, there is a difference. So people from the Europe, they prefer to stay over here versus over here. Their comfort is here, not comfort is here, but still they are doing the business in KSA. So what the authority is saying, okay, you are doing the business in Saudi, but you are living over here in the UAE. If you live in the UAE, what does it mean? But effectively managed and controlled all the decisions, day-to-day operation, they are taking from here by management. The key personnel or the key management sitting here and they are taking the decision. Taking the decision, they are controlling here. Like mostly the big organization culture where the owned by the local UE locals or nationals. So in case of any technical or where require the local, mostly they'll say, okay, our owner is not in UE. The common feedback we are getting. What is the reality? That doesn't matter as the understanding. So let's assume the person or the local or the owner is not living in UE. Why? He is operating business here, but might be he's living in any part of the Europe due to any reason. So he will come only the twice a year, thrice a year. So the decision is not the business is in the UE and decision taken from the Europe. So same way we took the example, the European or the European any like UK national, they open company in KSA, but they accommodation are resident of the UAE. So this is what they're trying to explain. Poem incorporated in UAE in KSA, but effectively managed and controlled in UAE. They are also coming under UAE corporate tax. Now this is another concept, and the tax covering all the aspects in terms of the business associate directly or indirectly from the UAE. Let's take the next point. CT effective date. The first CT effective date was from the 1st June 2023. Started effective from this, but as per the accounting period. Companies incorporated after, here the word is after 1st June, the first tax period, FTP, first tax period, starting immediately. So this is it was the very, people are confused over here in the market. So our tax period starting from the June 2023. But there was an additional point that mostly people missed or not understand. Accounting period starting on and after 1st June for companies incorporated before 1st June. So what does this mean? Because company may have the accounting period Jan to December. So then what is the first tax period? Accounting period starting on and after 1st June. Okay, so like can be the 23 their first tax period because they start from June. January come before June. It cannot be. So what is the 1st January after 1st June? 2024. So that's why the first tax period was 2024. The company is having the Jan to December accounting period. But there are certain entities, so their accounting period was, let's say, July to June. Now, what is the tax period? So 2023. If any company, the accounting period July to June, then their first tax period is starting from July 1st, right? Ended 31st June 2024. So this is the difference that we have to understand why some companies paid the tax for the 23 also, and some company did not pay the tax for 23. either partially or fully. So they got the impact of the taxation. Why? Because the law is saying tax is effectively from 1st June 2023. But along with that, as per their accounting period. So this is another point. Taxable person have different accounting period. How the different accounting period? One is this, one we discuss over here, and maybe another tax period way applicable. Start of first tax period. Same point we are gonna understand in another way. Counting period. Some companies have Jan to December. Some companies have July to June. Some companies have April to March, and some companies have October to September. So if in this way, just now the January is coming after June, or no, the same example. If January is not coming, means the 1st January after this date coming, from that onward, their first tax period gonna start. So the first tax period will be 2024. January 2024 will be start. First accounting and tax period will be from July onward as per the MOA. So here the first tax period will be Jan, here first tax period will be July, and here the first tax period will be April 25. Because April will not come before June. Here is the October. So this October April 24. Here will be 2023. So any question up to here, to any difficulty to understand this concept? Natural person, sole establishment, one person may have 100 sole establishment, but one person may have 100 sole establishment, but he will file one city return. And tax period will be calendar year, that is Jan to December. For all sole establishment will be the same. So after 1st June 2023, Jan to December, first tax period, 1st January 24 to December 24. If the tax period, accounting period is July to June, then from 1st July 23, if we seen here, 1st July 23 till June 24. And here, if we seen this, the company who have this period, he paid the 6 month extra tax as compared to the first case, because their first 6 months they did not pay the tax. But as the law is saying, so we have to comply with the law. It's not they can choose a different, but you of course have the option to change subject to FTA approval and based on the actual scenario and the reality. So similar fashion that their return is also is mentioned for this case. Return is here 30th September, due date will be, what is that, 9 months after the accounting period. Annual system 9 months after the tax period. For this case, the 9 months is the 31st March 25. For this case, 31st December 25. For this case, June 25. So this is the juridical person will learn the tax period. Then the natural person, we already knows what is their accounting period or the tax period. So by default, always Gregorian calendar year. There is no other option for the natural person. And if the natural person have X number of sole establishment, all will be considered one, and they will submit one return. This is the Gregorian calendar year. Now the next technical point, as per UAE commercial law, accounting period must not be less than 6 months or must not be more than 18 months. This also have the implication, many companies face the challenge over here during the first tax period due to this commercial law implication. What is the importance of the commercial law? We will understand one of the case, but I'm trying to share with you guys the city law plus UAE commercial law plus any other law, because this law came later on. What are the previous rules and regulation? He will align with them. He will align with them. He will not deviate from them, but he will take this law and he will incorporate under his taxation, his implication. Or wherever is required, they might update these regulations if they are conflicting with the city law. But we cannot ignore these laws, even applying the corporate tax also. We're going to see one of the example, you will understand what the implication of that. City corporate tax threshold change or apportion due to increase and decrease in the tax period. If some companies preparing their books of account for 6 months or 18 months, 6 months or 18 months, under certain circumstances, maybe entity preparing the books of accounts for 6 months, for 12 months, for 18 months. So there are certain tests or certain criteria that will not change. What is that? City threshold 50 million will remain same. Either you prepare books for 6 months, prepare for 12 months, prepare for 18 months, it will remain same. 3 million, another revenue threshold, it will be same if you are preparing 12 month, 18 month. Similar way, if you are preparing the books of accounts 6, 12, 18, 375 also will remain the same. This is not the 1,375,000. It's one typo error. Not constant, what is that? Apportion. Not constant means if the tax period will increase and decrease, that limit will be increase and decrease. That is a 12 million interest capping rule. ILLR, income limitation rule. So that will be increase and decrease based on that. So any question up to here? As you have any question up to this, you can raise your hand if you want to speak, or I will enable the mic. Okay, let's continue our topic. There is another point we have to cover. Just now we are discussing the UAE city law, UAE commercial law. Let's see one of the example of the UAE commercial law, how is impacting the corporate. Let's assume one company one LLC company, new company, incorporated, or established. 10 June 2023, and their accounting period Jan to December as per MOA. So one ABC LLC company, the new license issued on which date? 10th June 2023, and their accounting period Jan to December. So now please let me know what is their first tax period. Let me know what is their first tax period. What is our first tax period? So this is the question. So what is your first tax period? So I can give you the examples. I can give you the example option also. Option 1, Jan December 2024. Option 2, 10 June till 10 June 2023 till 9 June 2024. This option 2 and this is the option 3 are the custom period. What is the custom period? I'll add another option. The option is 4. Their first tax period will be from 10 June till 31st December 2023. Yes, guys. I appreciate your feedback. Here, one hand is there. Okay. Sorry. Would you please raise again your hand? Why it's not coming? Amit, you can open your mic. Yes, please.
So can you please repeat the question once again?
Okay. Another scenario, other hand, I'm not sure. I'm trying to see the option is not appearing that. Jasna, Sohail, option is not appearing in your case. I'm not sure you connected with mic or you connected from phone, something like that. As Amit, I'll repeat the question again. Or otherwise, if you type the question, so I'll see from the chat. I'm not sure what is the technical reason over here, but definitely, Amit, I'll try to read the question again. See, we are discussing the tax period. So in terms of the tax period, so what our understanding and what we are looking for, like ABC company, they issue the new license. On which date? This date, they incorporated or established the company. So now the first point, on which date the trade license is issued? 10 June. This is the after 1st June 2023. Yes, this is the after 1st June 2023. Now, normally in LLC company, we go into the MOA and check the financial year. So that's called the accounting period. So their accounting period is over here as per MOA. So now this company, what is their first tax period? What would be their first tax period? The question what we are looking for, what is their first tax period?
Trade license taken on 10th of July and accounting period is what?
June. This is June. Accounting period is Jan to December. Jan to December. This is the accounting period mentioned in the where MOA.
So the corporate tax period will be Jan to December.
Okay. Anybody else? Anybody else? So anybody else would like to clarify over here, or he have any question? Just now, so here, your option is, I'm not sure why it's not appearing. Disable to talk. Okay. No. Just now, Soil, would you please text and chat? I'll take your point from there. Okay, here some people already replied. Abdullah said Jan to December 24. The Zahur Iqbal said 10 June to June 23 to June 24. Then another person is said Muhammad Amir from June to December 24. Okay. So Mr. Amir, would you please unmute yourself or raise your hands and explain how you come on this point? If you raise your hand, so I'll open your mic and let's see. Muhammad Amir. His hand is not appearing. Allowed to talk. Hope you guys registered yourself and is appearing, because as Amit is already appearing, other person also appearing, allowed to talk. And Amit, can you lower down your hand? Okay, I'll come back on the slide. So we'll continue from there, and I'll answer as Amit given the right answer, but I'm not sure what was his understanding. So this is the main point that we have to understand, where the UE Corporate Tax, UE Commercial Law play the role. And today also we discussed our accounting period. Even in the MOA, where now we write the Jan to December, same time in the same paragraph, they written accounting period minimum 6 months and maximum 18 months. So if you calculate, first we have to follow the same accounting period, but if we follow Jan to December, but the company incorporated from 10th of June is exceeding the 18 months. So is a violation of the UE commercial law. So this is the reason we have to split the first tax period into two. One will be, because this will be 6 months plus days or months, here will be 12 months. Why we are splitting? Because the first, if we start counting from 10th June, so this will be 6 months plus 20 days. So this 20 days creating the problem, because these 20 days exceeding the accounting period that mentioned in the UE commercial law. So by force, they have to prepare first books of accounts, or normally we are familiar the audited books, audited financial statement, December 2023. What is the duration? 6 months plus 20 days in order to comply with the law. And we've seen in the market, many auditors issue the report without following this rule also. Without following this rule. And the same time, when in the first tax period, many people did not submit the tax return also. Why? Because they are not familiar. They're saying FTA sending us a notification. We don't know why it's coming. And the most of the in the market, people got the penalties due to that. So anyhow, this concept was important to highlight what are the importance of the commercial law. So this is ministry issued the one postponement in the last week when this is there. Unintentionally, they did not got this penalty. Why they did not got the penalty? Due to this FTA Decision number 7. They said the return coming on this date, or the return coming on this date, or coming on this date, they extended, because these are the first tax returns, they extended till 31st December 2024. The one-off scenario what I explained to you. So that is the one of the scenario. If anybody want to read this, so this is the also references there. FTA Decision number 7 extended up to this. So I can go through with that also. Who was incorporated or established or recognized on and after. It's applicable on whom? The company is on and after 1st June. So this decision implemented on the entity who is incorporated, established, or recognized on and after 1st June 2023. The financial period 31st December. Okay, if their financial period ending is 31st December, that like in our case that we took the example, so their return due is 9 months, that is September. So the FTA said, okay, instead of September 24, you can submit the return till 31st December 24. So on similar way, if the first accounting period ending on the January 24 and their return is coming on October, FTA said, okay, we extend this period and have the grace period. So up to this. On the 29th Feb, if it's ending, so they said, okay, it's extended up to 31st. And this decision is effective from 25th of September. If you look into that, this is the due date of the return submission. So exactly 1 week before they given this extension. And this is the first time they given the extension for the corporate tax matters, because this is the first tax period as a support. And this was the one of the case first year of newly incorporated entities. Newly incorporated entities must not less than 6 months and not more than 18 months. Hope this point is clear. Any clarification or question, please let me know. I guess you have any other point? So now the next we're gonna discuss the UAE corporate tax rates. So the how it's gonna impacting the rate. So we will understand that also. We are making the different part by